Alrighty, let's get into it. So let's talk about what setups we had today with futures. All right. So we're going to start with this NASDAQ here. So when we're talking about the ICT 2022, you need to have a full understanding. Okay. So what I did here on NASDAQ, as I always do, first things first in the morning, we go to the daily chart. Look, go to the daily chart. And it took me no time to establish that my bias is going to be bullish. Okay, so I want you to look at my cursor because this is what we're talking about Monday right here. And then because we're talking about Tuesday's trading day. So right here, we had this price action from yesterday to go off of. Each candle tells a story. Each candle holds information. And when I'm forming that bias, and I see this, what does this tell me right here? Well, what this tells me right here is, you see how it displaced above previous day's highs on Friday, or Friday's highs, not previous day's highs, but Friday's highs on Monday. What does that tell me? Well, that tells me it didn't respect that. But also you look to the left, do you see how you got this imbalance right here? That bearish imbalance right there? What did that end up becoming? An inverse fair value gap. So I want you to look at it like this. This did not respect any of that resistance. It did not respect previous day's highs. It did not respect that imbalance. And it had a lot of conviction, a strong close. Like we're still in that upswing. We're still in that upswing, meaning like we got that swing low that was put in a few days ago and it's still ramping up. No swing high. It's still doing its thing, pushing up with aggression, with strength. And now on Monday, you have that really strong close, that really strong expansion right there. You see? So since it did not respect those other levels of resistance, what's next? It didn't respect the imbalance. It didn't respect previous day's highs. So what's going to be next here? Well, if you zoom in, the next key level is going to be right there. Oh, let me here. Pay close attention. Pay very close attention. Right there. That's your next draw, fellas. Right there. Why? Because that's a liquidity pool. We already established, because remember, we're talking about Tuesday. We're coming into Tuesday, okay? We're coming to Tuesday here, May the 7th. And then we have Monday's price action to go off of. As I said, it didn't respect that previous high, displaced above it. It didn't respect its imbalance, it displaced above it. So what else do you got? It didn't respect it. It's telling you it doesn't want to respect that it's a level of resistance. So what do you got next? With this strong close, with this conviction, you got that high right there. You see? Right there. That's going to be your next draws. It'll be previous day's highs. When price is in that upswing like this, when it's got that momentum like that, it's so objective as to continuously run out previous day's highs. That's your strongest draw on liquidity that you're going to have. So right away, I have this level noted here coming into the day. Now, very strong trend, but then the next thing somebody may say though, okay, but isn't it in a premium marketplace? It is, but just because it's in a premium doesn't mean it has to pull back into a discount right away. There's a few things. Here's the next thing I did here when we were looking at this thing today. Me and my mentees, I drew my Fibonacci on here. I noted this imbalance. Why? Well, that's a level of support, of course. That's a higher time frame level of support. This higher time frame imbalance. Now I want you to go down to let's go to 1 hour. So we're just doing that top down analysis on this thing. So remember, we have previous day's highs, Monday's highs right here intact, coming to a brand new day, and you see this very lethargic, weak pullback inside this range. It comes down here. It comes down to that imbalance and it cleans out. What's that right there, fellas? That's Asian session lows. Asian session begins at 19. And you look at my chart, you can see, look at my cursor right there. That's where you want to have your time set to, New York. So we come down here and we clean out Asian session lows, which begins at 19, and it comes down into this higher time frame imbalance right here in London session. You see? That's a lot of support, fellas. That's a lot of support right there. Okay. So yes, I understand it's in a premium, but being that we have this massive support down here, being that we have this very clear draw up above right here, price is going to move in the direction of least resistance. It's going to move in the direction of least resistance, and it can only do so much in such a short amount of time. Okay. So and of course, you know, there's going to be some smart ass. It's like, oh, that ain't true, Mike. Sometimes it'll just dump. I get it. But I'm talking about typically, okay? It's going to want to gyrate from liquidity, and we haven't taken out significant liquidity right here. And then what happens as a result after taking out that liquidity? What do we do next after it does that? Because we've already concluded that it has this high up above. It has that draw up above. Draw doesn't mean PT. It doesn't mean it has to be your PT, but it's a draw on liquidity still, okay? So in London, what we had here, because we had several trades today, which I'm going to go over New York as well, but London, we had some stuff too. Now, London didn't really give pullbacks though. New York did. New York gave some nice pullbacks. But if you were to capitalize on London trades, then you would have to go off the candle close and not the actual pullback. And you know, some people's like, well, that's not ICT 2022 then, and you need to pull back into a discount. I get it. If you want to utilize, I mean, it's still ICT 2022, even if you don't like the thought process, it's still the same thought process here, which we'll go into New York here in a moment. But what we had here, we got this thing, it moved lower, had that move into London session. It takes out Asian session lows. It comes down to that imbalance right there. And then we also have what right here? Well, we have high day buy side. That's a key liquidity pool as well. And that's what me and my mentees were talking about. We wanted to see this thing ramp up, clean out this buy side here. Because we had what? We had that move lower, clean out this sell side. We had this imbalance right here. And then boom, we get this nice displacement higher. We get that bullish shift that comes up. It gets a close above that short-term high. It gets that fair value gap confirmation there. You see? So you can see right here, there's a 5-minute fair value gap right there. 3 candles make the fair value gap. Remember, 1, 2, 3. The top of that first, the bottom of that third, do not touch, leaving an imbalance. You get a strong close above that short-term high. That's a confirmed bullish shift in market structure. The second you get that shift, this becomes your next draw. The second that becomes, now, pay close attention to what I just said. The second you take this liquidity, it has Asian session lows. It has the higher time frame imbalance. And now it has a change in trend. This becomes your next draw on liquidity, that opposing buy side. It gets a change in trend. Think of like the tide has shifted. The tide has shifted now. It now wants to seek that opposing buy side. Cleans it out. Done with. Finished, right? So that's what we saw. Now, here's the deal though. It ended up having a reversal off that and selling off, taking out this, making a new low of the day, right? And I want you to keep in mind that it didn't take out previous day's highs yet. It's still in there. It's still in there. It's still valid. That's very significant. Very, very significant. Oh, and also, it did take out Asian session highs though as well. You see, right here, it took that out on that push up right there too. So that was a big liquidity pool that it took out as well. But the thing is, we still got previous day's highs intact. So I understand. Like, I'm not lost in this because I have that higher time frame perspective, because I've done the work in establishing that bias from the higher time frame perspective, which most people don't do. And again, I've taught you, and I've talked about it on my YouTube in depth about how to form that bias. But I had that high intact. I had previous day's highs intact right there. And then I see this pullback and it comes lower, takes out this low. You know, somebody may be looking to just sell it off. It's like, oh, this thing's still in a premium. It's come down, taking out this low. It's breaking out lower. It wants a discount. No, it wants a discount now. No, it doesn't. Because it's still got this liquidity that needs to take care of right here. Because it has that liquidity still there to take care of, it's not going to want to move down to a discount just yet. Okay. So what happens is it ends up pushing up here into New York session or right before equity bell, and it cleans out that high. So now I got something different to work with here though. Because then when it comes, like when I was forming my bias, that's what gives it direction for me. And that doesn't mean like just because like after it takes it out, it's, you know, it's just automatically going to reverse lower. Of course not. If it's in a strong trend environment, it'll continue to push up. But when I see this thing pushing up like that, and it cleans out that buy side like that, now I'm more focused on short plays. Now I had there was a long setup on this in New York as well, which we'll go into and unpack that. But when I see it first things first doing this, taking out this high like this, my focus, it goes to short plays. Okay, because you got to think like, yeah, it is still in a premium. It is still in an expensive marketplace. And now we're taking out this key buy side liquidity pool right here. You see, that isn't a small level in any regard. Like that's a very big level of liquidity that you took out right here. And now we're coming to equity bell here. Okay, so we're coming to equity bell here, and let's go to a lower time frame now, because let's talk about what we had here. So here's 930 rolls around, and then we get this little move lower. And again, we were talking about this today, me and my mentees on mic. We didn't trust that this was going to like hold up. Like it ended up having this move lower, which of course is what? That's a turtle soup. That is a I mean, technically not really a turtle. So I mean, it didn't take out any sell-side liquidity. It rebalanced that price action, but it was a fake move. This was a fake move lower. It had that move lower, and it came down to rebalance this price action right here. And for anybody who's kind of confused by that, 9:30, like right after equity bell is a key time where you'll see manipulation runs. So meaning price will move in the opposing direction where it really intends on going, for like the sole intention of taking liquidity or rebalancing price action in this case. So we came down, we did that first things first, we rebalanced that price action, but also I figured this was going to ramp up right at the bell because, well, if you go to that 15-minute and you look at that 15-minute, like it goes back to like when we're forming that that daily bias. When we're forming that daily bias, which we so when we're forming that daily bias, as I've taught you, like each candle tells a story, each candle holds information. It's very important that you understand that each candle tells you a story and it holds information. So we see this 15-minute right here. You see how it had like that really strong close right there? On that that's that 15-minute candle right there. You see how it displaced above previous day's highs that we were just talking about a second ago? And you see how it displaced above the previous 15-minute candle right here? That's what I just talked about a second ago. And it goes back to what I was saying on the daily chart. If you don't remember, then just rewind the video when we were talking about the daily chart for NASDAQ. It did not respect these levels as resistance. It's telling you that. Literally right there, it's telling you that. Right now, it's not respecting as resistance. And what happens here, it has that close, and then we come to 9:30, and it opens up right here. You look at my cursor, that's where this candle opens up at 9:30. What does it do immediately? At 9:30, which I just told you, pay very close attention because I'm giving you a nugget right here. I'm giving you a gold nugget right here. All right. It sells off immediately after having that strong close above these highs. And then there's that time element that we're combining this with. At 9:30, there's that time element. It sells off while having that liquidity intact, because you've got to remember, above this 15-minute high, which of course is high of day, you have bias liquidity residing above that level, and it opens up right here at 9:30, and it immediately sells off lower while leaving that liquidity intact right there. It sells off, and what does it come down and test? It tests the previous high of day level. Now we just have basic support resistance theory, because this resistance was cracked. It becomes support going forward right here. Boom. Right at 9:30, we have that fake run lower. We have that fake run lower right at 9:30 that comes down, tests this old high support. And then that's why I figured it was going to ramp up right there. So that's why when you understand this, you're not fooled by like that little, short-term gyrations in price like that, because you understand what it's doing here. And you can see that's what happened. Again, there's 9:30 and it immediately sells off. It hits that level right there, that little morning flush down to support, and then it ramps up off that, no surprise. So now after we ramp up off that support right there and it's taking out these highs, now I'm on high alert for a short play at this point. Because now we're making new highs here, and like as I said, it is it's in a premium marketplace. But of course, when I have this displacement up like this, I now have new levels that I need to work with here. What do I mean by that? Well, when I got the displacement up into New York session, it created these inefficiencies, of course, these inefficiencies in price down here, these fair value gaps on that push up. So remember, it took Asian session lows, and then we got that push up on this displacement. Okay. So you can see that's what happened. So I'm keeping an eye out for a short play, but for like a lower time frame, 1 minute shift or 5 minute shift, I ain't you wouldn't try to shoot for something all the way down here. That'd be a little bit too aggressive, fellas. Because you got to think like this thing's still overall bullish. 15-minute, 1 hour, like it's bullish. You got to consider that. So shooting for this low down here where it recently had a significant liquidity run, that's not going to be something that you're going to want to do here. But this deal-in range, taking it down to a discount within this deal-in range is definitely, that is a good PT area. Let's go to the 1 minute, back over to the 1 minute chart. So what happens here next, what you see happen here is we got this push up. It's ramping up, ramping up, ramping up. All right, we had that push up at 9:30. Right after 9:30, it's pushing up, and then boom, right here, look. We get a little displacement. Not the best displacement, I gotta say, but it's a displacement. It scratches off the list. It has the criteria. So this is what we got right here. We got fair value gap confirmation right there. You see how I got that fair value gap? 1, 2, 3. Bottom of the first, top of the third, don't touch. And then we got this strong close beneath that short-term low as well, which is what I like to see as well. I like to see a strong close. I actually like to see that candle close beneath the short-term low. It has that. So we get a shift in market structure here. There you go. There's a setup at your disposal. So it gave you a premium on the push up. So if you take your Fibonacci from this high to that low, guess what? You got a premium marketplace, and then it came up, and then it came down, it cleaned up the low-hanging objective. When I say low-hanging objective, I mean the low of the impulse move, so you could get like a simple one-to-one if you want it. Now, as I made very clear, and I was talking about this with my mentees today on mic, this is a valid PT as well down here. And that would give you, because let's see, because you could have shot for this as well, because that's your next inefficiency and a discount, because you had this new dealing range that was created right here. Remember, coming to New York session, you got this really big push up. It's coming up and it's cleaning out significant buy side. And you have these inefficiencies that were created on that push up. So you understand that it's probably going to want to revisit a discount within that range to come down to those inefficiencies, because it's already pushed up into a deeper premium here, taking out this buy side. So now you get this change in trend. After you get that change in trend, this becomes your next draw, being this inefficiency and a discount. Again, you're not trying to shoot for something all the way down here because overall it's bullish. It doesn't need to go down to that right now because it's overall the trend is bullish. You got to understand that's a trend that you're operating within. But because you got this dealing range right here, and you got these inefficiencies down here, that's going to be a draw after you get that change in trend, which you get right here. You get a change in trend. The second you get that change in trend, you have this serving as a draw now. So that makes it a valid PT as well. It really just comes down to how aggressive that you want to be with the play. If you want to take a simple one-to-one, there's nothing wrong with that. Okay? There's nothing wrong with that at all. So you can see it ends up pulling up into a premium. It gives you an opportunity. And even OTE, you can see right there, it comes up above 50%. There's your entry. Okay? And let's say you did that. Again, you got your entry like at a premium right there. You keep your stop above that high right there. You would target, say you want to target that imbalance, as I just said was a valid, as I just said was a valid PT, right? Over 2-to-1, just like that. Over 2-to-1. So think about that. 2-to-1, fellas, I mean, 50% win rate, you're cleaning the fuck up. You're not going to be right all the time, but you don't need to be right all the time. A 50% win rate, you are cleaning up. All right? You're just slamming it out the park. A coin, literally a fucking coin flip. You're slamming out the park. But I'm telling you, you get all these signatures. If you really get all the signatures and you got the, now kind of a trade-off that comes with big risk rewards that nobody talks about, none of the foodies want to talk about, is more losses comes with big risk reward. But with a 2-to-1, you can still have a fairly high win rate. Not extremely high, not as like high as like a 1-to-1, but you can still have a fairly high win rate with a 2-to-1. And you only got to be right. Remember, you only got to be right 50%, like just slam it out the park. I mean, of course you can be right a little bit less than 50% and still come out on top, but 50%, you are slamming it out the park. That's a coin flip, fellas. And if you have all this stuff in line, being that shift, you have the high probability shift, you have the liquidity, you understand where you are in the bigger picture of things, you can carve out a little bit more than 50%. All right, I'm truly confident that you can carve out a little bit more than 50% win rate. And that's available to you. And think if you could have did it even better and or got even bigger just by waiting on OTE, optimal trade entry. Where's that at? Where's OTE at? Oh no, I don't know. I guess it removed my tool. I used to have an OTE setting on there, unless I'm looking at the wrong place. But in simplest terms, guys, 62%. Look for that's OTE in that area. You can get even better risk reward, of course. So that's what we had though. It ended up selling off here. And it was just really clean. Now it comes down to this imbalance. You wouldn't really want to look for, and I made this very clear, you wouldn't really want to hold for past that at that point. All right, because then it's more risky because you had that significant liquidity run right here. You got this dealing range that now you're in a discount within that dealing range, so it's not a good deal anymore. We actually had a buy setup right after that. And the buy setup was right here. So now you get a push up to the upside right here. You see? It might have had it on a 3-minute too. Let me see. I think it might have. Let me double check though. It did, absolutely. You see? So we came down into a discount within that 15-minute range. What I mean a discount. Again, this is that 15-minute range that we were just talking about. And if you draw your Fibonacci from that high to that low, or I mean that low to that high right there, you can see it pulled back into a discount and it seeked that imbalance. So now you're in another interesting area. And I get it's still in a higher time frame premium, but again, price is going to gyrate from liquidity to liquidity. It's going to do its thing. It's a very strong trend right now. And this comes down to a discount. It comes down to that imbalance. And then what happens here is we get a shift. Look. You come down to a discount, and there's your classic ICT 2022 once more right there. You get your fair value gap, you get your strong close, and you get your discount right there. You get your discount marketplace. See that? And again, you could just shoot for the low-hanging objective if you want. When I say low-hanging objective, I just mean the high of the impulse move. So the high of the impulse move, which is right here, simple 1-to-1. There's nothing wrong with that at all. Or you could shoot for more. You could shoot for the high there. 1.56, or you could trail it. I mean, whatever you want to do, right? We're all, have different types of ways of doing things, but that's how you would approach it. Comes down to a discount, has the shift, and then it comes down to another short-term discount, and then it reaches for the opposing buy set up above, and that's what you had happen there, fella. All right, fellas, if you enjoyed this video, make sure you leave a like on this tweet. I keep most of my videos on YouTube and Instagram. Like, I have a lot of Instagram shorts as well, but if you guys really enjoyed, I'll plug some more videos over here on X as well. And yeah, so I'll catch you later.